All right, so today we're diving into a company that you probably know from those little boxes that plug into your TV.
Roku.
Roku, exactly.
Yeah.
They helped a lot of us cut the cord and jump into the world of streaming. But their stock is down 71% from those pandemic highs. So is Roku a company on the ropes or poised for a comeback in 2025?
Well, that's the million-dollar question, isn't it? And what's really fascinating is how Wall Street seems to be divided on this. Some analysts see a potential 30% upside,
Wow.
while others are much more skeptical.
It sounds promising.
Yeah,
So like detectives, we're going to examine all the evidence, everything from Roku's financials to their position in this crazy streaming landscape.
Exactly. And by the end, you'll have all the insights you need to decide if this is a comeback story worth betting on.
So to kick things off, let's talk about those little boxes, because Roku isn't just about hardware anymore, is it?
Not at all. In fact, their business model has gone through a pretty dramatic transformation.
Yeah.
Back in 2015, selling those devices was their main thing, right? It brought in something like 84% of their revenue.
Yeah.
But fast forward to today, and their platform segment is the real powerhouse, accounting for a whopping 85% of their revenue in the last quarter.
Platform segment. Now that sounds kind of technical. What exactly are we talking about here?
Well, it's a bit more nuanced than just selling software or something like that.
Okay.
They've really shifted from being a hardware company to becoming more like the Google or Facebook of streaming.
Okay, now we're talking, give you the details.
All right, so imagine you're scrolling through your Roku home screen trying to figure out what to watch.
Happens every night.
Every ad you see, every time you sign up for a streaming service like HBO Max through Roku, that's them generating revenue.
Oh, so they're making money from both the ads and from people signing up for other streaming services.
Exactly, a brilliant two-pronged approach.
But hold on, if they're practically giving away those devices at a loss, doesn't that put a strain on their finances?
It's a bold strategy. No doubt they're taking a hit up front to get their operating system Roku OS into as many homes as possible.
Ah, so it's all about getting those eyeballs on the Roku platform.
You got to think about it. You know how frustrating it used to be to try and find the HBO Max app on your old TV?
Oh, yeah.
Well, with Roku, it's right there, front and center, easy peasy.
So that's the power of their platform play.
Yeah.
They make it super user-friendly, and that attracts both the users and the streaming services.
Exactly, and the numbers really back this up. Smart TVs with Roku OS pre-installed are outselling the second and third largest operating systems combined.
Wow, so they're dominating the market.
They really are.
Okay, so the hardware might be a loss leader, but it's a calculated move to win the operating system war. But what about their bottom line? The article mentioned Roku lost $36 million in Q3 of 2024. That sounds pretty rough.
It's important to look at that number in context, though. That loss is actually a significant improvement compared to the previous year, where they lost 10 times that amount in the same quarter.
Oh, wow. So they're actually heading in the right direction.
Plus, their platform segment has a healthy gross profit margin of 54%.
Okay, now for those of us who don't have an MBA, what does a 54% gross profit margin actually mean?
It basically means that for every dollar they make on the platform side, they get to keep 54 cents after paying for the costs directly tied to running that platform.
So that's a good sign, right?
Yeah, it's a good indicator that their core business is efficient and, importantly, profitable.
Okay, so there's some positive news there. But then the article mentions they're projecting a bigger loss for Q4 because of holiday promotions and even more aggressive device sales. Why would they do that if they're trying to become profitable?
They're playing the long game. Remember, they're prioritizing user growth above all else, even if it means taking a temporary hit to their earnings.
So it's all about getting those Roku devices into as many homes as possible, especially during the holiday season when people are buying new TVs.
Exactly. They're doubling down on that strategy.
So they're betting big on the future. But is it going to pay off? We've seen this massive shift to a platform-centric model, and they're clearly the leader in terms of market share. But are there challenges ahead?
Oh, there are definitely challenges, especially when it comes to the streaming services themselves.
Right. The article mentioned declining ad revenue from those streaming services, and that seems like a pretty big deal.
Yeah, it is. Streaming giants like Netflix and HBO Max are starting to prioritize profitability, which means they're cutting back on their ad spending.
And those were some of the most lucrative ads for Roku.
Exactly. So it's a bit of a catch-22. Roku needs these streaming services to attract users to its platform, but those same services cutting back on ads could really hurt Roku's bottom line.
So it's like a delicate dance.
It is, but this challenge also presents a really interesting opportunity for Roku to shake things up.
Really?
It forces them to think outside the box, to diversify and find new sources of ad revenue, and that brings us to their partnership with the Trade Desk.
Yes, the article mentioned that, and it sounds like a pretty big deal.
Yeah.
Can you explain why it's so significant?
Well, the Trade Desk is a major player in the world of ad buying. They connect brands with publishers across a massive network of websites, apps, and now with Roku, even your TV screen.
So instead of relying on just a handful of streaming services for ad revenue, they can tap into this huge pool of potential advertisers through the trade desk.
Precisely, think big name brands, consumer goods companies, all potentially spending their ad dollars on the Roku platform.
Okay, so by diversifying their ad revenue, they could potentially offset the decline from those streaming services and maybe even boost their overall revenue. That's a pretty smart move.
Absolutely, a classic example of turning a challenge into an opportunity. But it's important to remember that the streaming landscape is constantly changing. It's like a puzzle where the pieces are always moving.
So Roku needs to stay agile and innovative to not just survive, but thrive in this environment.
You got it.
So we've unpacked Roku's business model, their strategic moves, and some of the big challenges and opportunities they face. Where do we go from here? What else should we be considering as we analyze their comeback potential?
Well, the Market Beat article definitely highlighted this partnership with the Trade Desk as a potential game changer, but to really understand the impact, we need to dig a little deeper into what the Trade Desk actually does.
Yeah, I'll admit I'm a little fuzzy on the details myself.
Okay, so think of the Trade Desk as a matchmaker for advertisers and publishers. They use some really powerful technology to connect brands with the right audience at the right time across a huge range of websites, apps, and now with Roku, even on your TV screen.
Okay, so instead of Roku relying on just a handful of streaming services for their ad revenue, they can now tap into this massive pool of potential advertisers through the trade desk. That's a lot of new doors opening.
Exactly. And remember those high margin ads from streaming services that are starting to decline well. The Trade Desk works with some of the biggest brands in the world who often have much larger advertising budgets.
So this could be a way for Roku to not just make up for those losses, but actually increase their ad revenue significantly.
Precisely. It's a huge potential upside.
But let's play devil's advocate for a moment. Couldn't this reliance on the trade desk also be a risk? What if their technology doesn't work as well as they say? Or what if their network of advertisers shrinks?
You're right to raise those questions. Anytime a company becomes heavily reliant on a single partner, it introduces a certain level of risk, however. The Trade Desk has a really strong track record, and they're widely considered the leader in programmatic advertising.
So it's a calculated risk, but one with the potential for a big payoff. But this partnership with the trade desk isn't the only thing Roku has up its sleeve, right? The article also hinted at some other growth opportunities.
Right, they're not just about hardware or even just being a platform for other streaming services. They're actually starting to create their own original content.
Oh, wow. So like what Netflix and Amazon are doing.
Exactly. They acquired the Quibi content library a while back, and they've been steadily building up their own slate of Roku Originals.
Interesting. So instead of just being the place where you watch other company shows, they could become a destination for their own unique content.
It's still early days, but it has the potential to be a big differentiator for them in the future.
It could definitely set them apart and maybe even boost their subscription revenue.
Yeah, they could offer a premium subscription tier that includes both access to Roku Originals and ad-free streaming.
That makes sense. It would give them another revenue stream and reduce their reliance on those per subscriber fees from other streaming services.
Exactly. It's all about diversification.
Okay, so we've got the platform strategy, the partnership with the trade desk, and this venture into original content. What other pieces of the puzzle are we missing?
Well, so far we've been mostly focused on the US market, but Roku has big plans for international expansion.
So they're going global.
They want to be the platform of choice for all those new users around the world who are just starting to embrace streaming.
That's a massive market with
Yeah.
tons of potential. But isn't the international scene already pretty crowded with players like Amazon and Netflix battling it out?
It definitely is. International expansion is never easy, but Roku has a key advantage, their operating system.
Right? They can partner with local TV manufacturers to pre-install Roku OS on their devices, just like they've done so successfully here in the US.
Exactly. It's a strategy that could help them gain market share quickly in new regions. Plus, their focus on providing a neutral platform that gives users access to lots of different streaming services could be really appealing in international markets where consumers might not want to be tied to just one ecosystem.
It's like being the Switzerland of streaming.
Exactly. No alliances, just giving users what they want when they want it.
So we've laid out the key pieces of Roku's comeback story. They're shifting to a platform-centric model, leveraging the trade desk to diversify their ad revenue, exploring original content creation, and setting their sights on international expansion. But with all these pieces in place, are they truly poised for a comeback in 2025?
Well, as with any investment, there are no guarantees. The streaming landscape is so dynamic and unpredictable. But when we look at all the evidence, it's clear that Roku is making smart moves and positioning themselves strategically for future growth.
Sounds like they've got a solid plan. But as investors, we can't just take their word for it. We need to look at the cold, hard numbers.
Absolutely.
Let's dive into their financial performance and see if their actions are actually translating into results.
Let's do it.
Okay, so we got this big picture view of Roku's strategy, but the real question is, are they actually making progress towards profitability? What do the financials tell us?
Yeah, that's the bottom line, isn't it? And while they're still reporting losses, the trend is definitely moving in the right direction. Remember that $36 million loss in Q3?
Yeah.
That's a big improvement from the previous year, and their gross profit margin on the platform side is a healthy 54%. Those are good signs.
Okay, but they're also projecting a wider loss for Q4. Doesn't that kind of contradict the whole idea that they're moving towards profitability?
Okay, not necessarily. Remember, they're going all in on user growth, especially during the holidays. You know, all those device sales and promotions, they come at a cost.
Right.
But they're making a bet that those new users will become loyal customers on the platform side, long
Well,
term.
so it's a short-term hit for a potential long-term gain.
Exactly.
But for investors considering Roku, it's a tough call.
Right.
Weighing the potential of this comeback story against the risks of a company that's still losing money.
It's a balancing act for sure.
And we can't forget that Roku isn't playing this game alone. The streaming landscape is super competitive with giants like Amazon and Netflix constantly vying for viewers' attention.
Yeah, it's a crowded field, and there are new players popping up all the time, each with their own unique offerings and strategies.
It's a wild world out there.
It really is, and that's why it's crucial for Roku to stand out, to differentiate themselves. And their focus on being a neutral platform, offering access to a wide range of streaming services could be a big advantage.
It's like being the Switzerland of streaming.
Exactly. No alliances, just giving users what they want when they want it. And with their growing investment in original content, they can really strengthen that value proposition.
Okay, so we've got the platform strategy, the partnership with the trade desk, and this move into original content. What else should we be thinking about?
Well, up until now, we've been mostly focused on the US market, but Roku has some pretty ambitious plans for international expansion.
So they're going global.
They're looking to tap into those international markets where streaming is really starting to take off.
That's a huge potential growth area.
It is, but it's also incredibly competitive. You've got those established players like Amazon and Netflix who are already battling it out in a lot of those regions.
So what makes Roku think they can compete on a global scale?
Well, they've already made some inroads in Latin America and Europe, and they have a key advantage, their operating system.
Ah, right. They can partner with local TV manufacturers to pre-install Roku OS on their devices, just like they've done here in the US.
Exactly. It's a smart strategy that could allow them to gain market share really quickly in new regions. Plus, their focus on providing a neutral platform that gives users access to a wide range of streaming services could be really appealing in those international markets.
Especially in places where consumers might not want to be locked into a single ecosystem.
Exactly. It gives them more choice and flexibility.
All right, so we've covered a lot of ground here. We've looked at Roku's financial performance, their strategic moves, and the overall streaming landscape. But the big question remains, is Roku truly poised for a comeback in 2025?
It's tough to say for sure. There are always a lot of unknowns when it comes to investing, but I think Roku has a compelling story, a solid strategy, and they seem to be executing that strategy pretty effectively.
Yeah, it's clear they're not just sitting back and watching the world go by. They're innovating, they're adapting, and they're fighting for their place in this crazy fast-paced industry.
Exactly.
But at the end of the day, the decision of whether or not to invest in Roku is up to each individual investor.
Absolutely. There's no one right answer. The important thing is to do your own research, weigh the potential risks and rewards, and make a decision that aligns with your investment goals.
Couldn't have said it better myself.
Yeah.
We've given you the information, the analysis, and hopefully some food for thought. Now it's up to you to decide if you believe in Roku's comeback story.
And remember, this is just the start of the conversation. Things are always changing in the streaming world, so stay informed, stay curious, and keep on exploring.